Okay, I'd like to call this Economic Development Corporation Board of Directors regular meeting to order. Today is March 27th, 2018. The time is 6:02. We do have a quorum with Mr. David Torres, Mr. George Salinas, Mr. Richard Molina, myself, Gilbert Enriquez, Mr. Farias, is in absentia. Certification of public notice, Mr. Trevino.
Yes, sir. Mr. President, thank you. Everything has been certified and posted as per law.
Okay, we have number 3, consider approval of Board of Directors meeting minutes for February 27, 2018 board meeting. Do I have a motion?
Motion to approve.
I have a motion by Mr. Torres. Do I have a second?
Second.
Second by Mayor Molina. All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. For the record, I asked for a sign of raising the hand. So,
Yes.
yeah,
That's good.
just
Oh,
because
yeah.
I know on the council
I like
we
that.
do.
It's old school board stuff.
That's old school style.
Never forget, never forget. Okay. Item number 4, consider election of officers.
I'd like to make a motion to keep the same executive board in the place of the secretary or treasurer, as long as either Mr. Salinas or Mr. Torres want to volunteer. Which one of you wants to? Okay.
So we have myself,
So my motion is
Yes.
the same executive board that we have in place with Mr. Salinas being the treasurer / secretary. That's
Okay.
the way it is?
yes. So we'll have myself, Mr. Gilbert Enriquez as president, Mr. Mike Farias as vice president, and Mr. George Salinas as secretary treasurer positions.
Second that motion.
Okay, we have a second. So we have any discussion? All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. Item number 5. I'd like to...
Nope.
Okay, number 5 is discuss and consider authorizing adding the executive director and other designees to the signature cards for the EEDC accounts at Plains Capital Bank, Texas National Bank, Lone Star National Bank, and Greater State Bank. This is because of our new executive director. He needs to have authority to sign checks and sign any financial documents at these banks. So do I have a motion for approval?
Motion to approve.
So I have a motion by Mr. Torres, second by Mr. Salinas. Any discussion? All those in favor, please signify by raising your right hand. All those opposed, same sign. Motion carries. Okay, if it's okay with the rest of the board, I want to enter executive session to discuss line item that has to pertain to, what number is it? The last one.
Aye.
Consultation with attorney, potential litigation regarding Augustine Gus Garcia. Do I have a motion to enter executive session?
Motion to. Second.
We have a motion. Aye. Under executive session. We got a motion by Mr. Salinas, a second by Mr. Torres. All those in favor signify by raising your right hand. All those opposed, same sign. Motion carries. Mr. Vela.
This time, the board, EDC board will convene into executive session in accordance with the Texas Open Meetings Act to deliberate under the following sections, Section 551.071, consultation with attorney, 551.072, deliberations regarding real property, 551.074, personnel matters, and 551.087, deliberations regarding economic development negotiations. The board will not take any action. During executive session, we'll reconvene and consider taking any appropriate action on any of the executive session items.
All right, thank you. by Mr. Torres. All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. The time is
6:21.
6:22. There's no action taken in executive session. Letter I, I need a motion to authorize our attorney, Mr. Rick Gonzalez, to
It is directed.
proceed as directed in executive session.
Motion to approve.
Second. I have a motion by Mr. Torres, second by Mr. Salinas. All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. We're going to head back to the regular agenda. We're on item number 6. Discuss and consider the preliminary draft of the EEDC fiscal year audit for 2016-2017. Mr. Trevino.
Yes, sir. Mr. President, we have Mr. Noe Garza available here to provide us a preliminary report on our annual fiscal audit. He's going to explain what's been going on this last year and some recommendations that we're going to have to reconvene tomorrow to finalize this audit in order for us to get to the city's audit get approved. And I'll invite Mr. Garza to present to the board right now.
Okay, Mr. Garza, thank you for being here today.
Good evening, Mr. President, members of the board, Mr. Trevino. For the record, my name is Noel Garza. I'm the principal of Noel Garza CPAs, and we were hired to conduct the annual financial audit for the Edinburgh EDC as of September 30, 2017, and so I'm here to present the results of the audit. This isn't a draft version. We have one item that we're still pending, and hopefully that there's some action taken to give us that direction so we can complete this for tomorrow's presentation. So just briefly to kind of cover the report, there's, for anybody that's new to the board, the report is presented in the governmental audit standards because it is a component unit of the city and then therefore gets incorporated into the city audit. The report is presented in the governmental format. So just to cover a few pages for you, page 1 of the report is the auditor's opinion. And this opinion is where we've rendered our opinion based on the audit work that we've conducted and performed during the process. I'll just point out to you the last paragraph of the report. I'm sorry, the first page, page 1, does present our opinion. And so here we are rendering an unmodified, unqualified opinion, whereby we're stating that the financial statements, and I'll paraphrase, we feel do fairly present the financial position of the Edinburgh Economic Development Corporation as of September 30, 2017. So that's the unmodified, unqualified is the highest rendering that you can receive. And we had no items that we would have caused us to render opinion otherwise on the financial statements. I'll jump to, there's quite a few schedules in here that are governmental, for the governmental nature, and but the schedules that I would refer you to would be page 10 is your balance sheet. And this is a balance sheet for the EDC, and again, it's as of September 30th. And it's in governmental format, not in a not-for-profit format, so it's a little bit different. But I'll just point out a few items to you. Your general fund is your basic fund for operations. You'll note there that the EDC did end the year with total assets of $18.5 million, and it's just a small payables for the year 9,777, and an unassigned fund balance of $18.5 million. I'll discuss that component. Well, I guess I'll discuss it here. We show that it does show an $18.5 million undesignated fund balance, but please keep in mind that a big component of that is the receivables. It's comprised of the receivables in the asset category. So that portion is not really available for any use. It's tied up.
Mr. Garza, let's explain that. Let's say, what consists of that net's receivable?
The receivable, that is
$14 million. What 14.369 to be exact.
That
What
is your
what does that
Santana
consist of?
Textiles note receivable.
Say that again, I'm sorry?
Santana Textiles note receivable.
And that's over how many years?
I don't recall the maturity on it, actually.
Well, shouldn't it be in the notes?
It might. It doesn't. I don't think it carries the receivable maturity on there. But we can add it in for tomorrow's. I do list it as as of the 14.3 million, but I don't have the maturity date on there.
Okay, so let me talk about that one line item. On your statement of net position regarding that 14.369, you have receivables net of allowance for uncollectibles. So you're telling me that the EDC is going to collect the entire $14.369 million, that there is no allowance for bad debt.
There is an allowance.
And where is that line item?
It's netted out of that item. That's why it's indicated as a net.
Up on that one line item?
Yes, it's a
So-
net.
So then the net, the 14.36, but then if you go back to the balance sheet, it's the same number.
That's correct, because it's also net.
So then what's the gross? What's the total? If you're telling me that's net, then there has to be a gross.
Let's see.
So if that's...
Because they're both net on both pages. There's both schedules, they're showing the net amount.
Right.
So it's
So you're-
$500,000 higher.
Right, so you're telling me you've already taken the bad debt into consideration?
Yes.
The allowance for bad debt. So then what is the actual number?
Add $500,000 to it.
Okay, so where is that amount? Is it included in your notes? Because it should be included in your notes. If it's an audit, it should be included in the
Okay.
notes.
It's not noted, it's noted as a net item, but we can certainly make that modification.
Okay, I think this needs to be reviewed, and actually everything that is going on, the whole operations of the EDC needs to be incorporated into this audit so the public can know exactly how the financial operations of this organization is going. And with eliminating just certain little things like that, that really doesn't give the public an exact picture of where the financial state of this organization is. So I would implore you to go through all the notes and make sure that every aspect of every single line item is detailed so the public can know exactly where their tax dollars are being utilized.
Sure.
Okay? Thank you.
So the 18, back on page 10, the $18.5 million does include the receivable for Santana. So the unassigned portion is actually $4.2 million that is it's amongst that $18.5 million. On page 12, this is your statement of revenues, expenditures, and changes in fund balance, which is another way of stating your income statement, but this is the proper term. So on this schedule, you'll notice that your revenues are comprised primarily of your sales tax. As for the year that EDC did receive $5.2 million in sales tax revenue, which is the largest component, with others of investment earnings, rents and royalties, and other revenues totaling $6.2 million. And the expenditures for the year totaled $7.143 million, with the largest component being economic and development assistance, which is an overall category for an EDC. It's a governmental functional category, so it includes all economic activity other than your debt payments and
So
capital.
basically all your office expenses, all your expenses to operate the EDC over the course of the year.
Absolutely.
So is that number, the 4.65 or 45 number, is there a breakdown in the notes regarding that? Is there a schedule in the notes?
No, there's not.
Okay.
This is the standard formatting for a governmental.
But can that be broken down so we can know exactly where each line item of the accounting is going? Because there should be a schedule that break down all your operation expenses. So everybody can know, okay, you know what, this is for salaries, this is for office expense, this is for miscellaneous, this is for travel, this is for, so on and so forth.
This is the normal format, but Mr. President, we can probably come up with a supplemental schedule that would break that number down, but that's not the normal format for a governmental audit. You're talking more in terms of a not-for-profit organization, but this is the formatting for a governmental. But if you'd like a supplemental schedule, we can certainly come back and add it to the report.
And I would, if you would do that for us, I'd appreciate it, because if you see there on where it says net change in fund balance, there was a 1.296 shortfall last year.
That's correct.
So that means our expenditures were more than our revenues.
That's correct.
And that money, to balance the budget, came from our fund balance.
That's right.
So it decreased our fund balance.
Yes, absolutely
So
correct.
I would love to know how that 4.645, what line items were used in that $4.645 million. Okay, so if you could do that for us, I'd really appreciate it.
Okay, be happy to. So the other expenditures that were paid for during the year, you'll notice are bonded debt, other debt principal, and bonded interest, which totaled to just about $2.4 million in total. The total expenditures for the year was $7.143 million, which did leave you at a deficit of $910,000. There was a transfer out to the city as well as other resource income, which, when netted with that excess expenditure, resulted in a $1.2 million shortfall.
Can you tell us what that transfer out was?
That is a transfer to the city to help facilitate the payment on the 2015 bond issue, the TIERS bond issue for the arena.
For the arena?
Yes, sir.
So that was a payment to the city?
Yes.
Or was that a payment to the actual bank that's holding the...
To the city. It's a transfer. It's not the debt of the EDC, it's a debt of the city, so therefore you transfer the funds to the city, who then make the debt payment.
Okay. So it's to the city or to the government
Or
facilities?
to the corporation that's responsible for the debt.
So the government facility corp.
Yes, sir, that's correct.
I have a question, sir, really
Yes.
quick. I just want to confirm that for the record. You're saying that the payment for the arena is paid from the EDC to the city, then the city pays them? Is that where it comes from, or does it come from the EDC? The EDC is paying for that?
That's whenever there's a shortfall based on the covenants of the 2015 bond issue, the EDC was committed to make up the shortfall until such time as that the city could make the payment on their own.
Okay, so when that time comes, the city will then take over that payment?
That's correct.
Okay.
So on page 14, you'll see basically the same statement, schedule of revenues, expenditures, and changes in fund balance, presenting the original budget, the ending budget, and the actual amounts in the three different columns. You'll notice how your budget began the year, ended the year, and how it compared to the actual revenues and/or expenditures at the end of the fiscal year. You'll notice that the revenues for the year were budgeted at $5.4 million. The actual revenues actually came in at 6.2, so there was an excess revenues there. Your expenditures ended the budgeted amount was 7.6 million, whereas only 7.1 million was expended. So there was a savings there from what was originally budgeted, and therefore not everything was expended. And so that you can see the last column, you can see the positive or negative variance for each of the items as presented. Now, those are there's notes, considerable.
Can I ask you a question? I'm
Yes,
sorry
sir.
for
No problem.
interrupting. Is it customary for an organization to approve a negative budget? Is it customary in your profession?
It's not unheard of, because they can budget with the expectation of making the funds up with fund balance. That's part of what fund balance is available for, at the discretion of the board. If they choose to approve a budget that is short, they can, doing so knowing that they'll make it up with the fund balance. So it's allowable, and if the board sees to do fit, then it's acceptable.
Is it something that you would recommend to do?
You know, their fund balance is there at the discretion of the board to take on projects as they see fit. So there may come a time when you do that purposely, because you have these funds that you've been putting into reserve to be able to take on these projects. And so when that does occur, then you knowing full well that you'll be using those funds to do that.
Or another prudent thing that you could do is actually come during the course of the year and amend the budget to add to it, to remove, to transfer money from the fund balance over to an expenditure that you didn't have budgeted. That is also another another viable option as well.
So by transferring from the fund balance, you're basically you're doing the same,
Right, but
process, accomplishing it.
instead of having a negative budget, approved budget, you'd have a balanced budget, and then any major expense, the public will know that, hey, you're taking it from here, because you have to go and amend it, get it approved by the board. You're amending the budget for that particular project and saying, okay, $1 million is coming out of fund balance because this is something that we want to do for the community, right?
Absolutely.
I mean, I would think that's the prudent thing to do.
That's certainly an option that's available to you.
Okay. Thank you.
Yes, sir. So the other, now, there's just quite a few notes in here relating to those financial statements, but I would refer you to page 36 of the report. And 36 is another one of our opinions. It's our report on internal controls. This report is where we will note if there's any items that come to our attention that are findings or items that need to be brought to your attention. This is where we would note them. So this is a report on internal controls. In this report, we did identify an item on this report stating that we did find an item that needed to be disclosed as a finding, and so that finding is listed on page 38. And so the finding resulted from the payments of the bond issue series 2015, the refunding series 2015. I'm sorry, it should be. It was 2015, correct. So there was a reserve fund that was established as part of the bond covenants, and bond counsel, who will be on the agenda after I am, will help elaborate more on this item. The administration utilized some of the reserve funds to make the bond payments during the year, and for whatever reason they thought that they were authorized to do so, and then they took the funds from the reserve funds, utilized them to make the bond payments on this refunding series. So therefore, the reserve funds were depleted, and that, according to bond counsel, is a violation of the bond covenants. And so we're making the notation here that the funds were inappropriately utilized from the reserve fund, and therefore we used them in an inappropriate manner. So we are recommending that this item be reviewed and considered for corrective action to replenish, as bond counsel will discuss with you, to put it back into place as called for by the bond covenants.
Okay, so that finding is part of your draft?
Yes.
Okay, perfect.
Well, I have a question. Could you just explain in layman's terms? We're new to the board and we just want to get this straight. There was some payments that were pretty much done, made from the EDC account without authorization, or how does that work?
They would have utilized funds. They would have gone through the appropriate authorization channels within the corporation to make the bond payments. The administration took the appropriate steps to utilize the funds, where they probably
This was bond payments for Santana Textiles, correct?
for the refunding bonds for that one. Yes.
The refunding of bonds, and just for the record, so that the public knows what Santana Textiles is, it's a denim factory that's kind of hidden out there on North 281. Richard, if you want to take a drive out there, the previous administration promised 800 jobs. I think the records show they didn't have 800 jobs. I don't think they ever got to 100. Maybe they did, but at the current time they don't. I think there's a report at the state where you can find that. So tell us more about these payments, just so that I could understand it a little bit better.
So when the refunding bonds were issued, there were covenants that established a reserve account for these bonds, and bond counsel can better explain the intricate details of it. But the funds were there utilized under special circumstances. They could be utilized to make the bond payments, and I'm not an attorney, so I can't give legal advice, but bond counsel indicates that those funds should not have been used during the year to make the bond payments. They didn't meet the circumstances or requirements to be able to utilize them, but the administration did not seek bond counsel's advice prior to making payment, and therefore utilized the funds, made the payments, and now it's come to light that they were not in the right to do that at the time.
Do you know how much the amount was, sir?
In total, it's approximately $1.2 million.
Okay. 1.2 million.
So the bond counsel will be coming
Right.
next to be able to explain further that.
Right.
that,
Okay, one quick question. Going back to that $14.369 million net receivable,
Yes, sir?
is there a reason why we don't have the corresponding payable, what we owe to the bond as
Okay.
part of a liability, as part of the liability section?
On page 10, the C1, which is your governmental balance sheet, the government accounting standards they prohibit long-term debt from being listed on the schedule, but long-term receivable is allowed. So we have the 4.3 million presented because it's an allowed presentation, but the debt is not. But if you go over to page 8, which is the statement of net position, that one does include the debt, because this one is a statement of net position, which is a full accrual schedule, which is allowed to present not only debt, but also fixed assets. And so therefore, on that schedule, it does include the debt, the long-term debt.
Which is the 17.8 million?
That includes all the bonds
All the
that are outstanding.
long term, which the majority of it is the Santana bond.
Absolutely right.
Okay. Okay, thank you for clarifying that. Appreciate it.
That's all I really had to present at this point.
Okay, so by tomorrow, we have our meeting at 12 o'clock noon. Will you be able to have those corrections on that ready by then, or would we need to cancel that meeting, have another meeting?
To have the supplemental schedule added, it probably would need a little bit more time to include that schedule, if you want that one presented.
Is this something that we have to get approved tomorrow, or can we delay it another week?
I think the city is waiting on our portion.
Oh, the
Audit.
city's on, okay.
They have to file before the end of the month. That was why we scheduled it for tomorrow.
Could we approve it
Subject to?
subject to those additional notes?
You can have it approved, and he can just give that as a supplement later, but he can issue the report, and you can approve it, and then he can give you the supplements later just for benefit that don't have to be in the report. Am I correct?
Sure.
Okay. All right, then we'll do that.
Okay.
Okay.
good.
Appreciate it, Mr. Garza. Thank you for being
Thank you
here.
so much.
Any other questions, Mr. Garza? All right, thank you.
Yes, on
Oh.
that report, I just want to make sure that the public is aware, there's a lot of people that are wanting incentives from us, that are asking us, for different types of things, such as they're bringing the business and they're promising X amount of jobs. We just want the public to know that I discussed this earlier in a video that I did, but really I want them to know that the city cannot make any promises to do anything else until we've not even cover our payroll, until we've taken care of the Santana payment, until we've taken care of the Ebony Golf Course payment, until we've taken care of the Parks and Recreation building, and also the two payments that we do have pending with the arena up until the city takes it over. So I guess during the construction phase, I guess we're just going to be paying interest on those bonds until the building is done. So I kind of wanted that, will that be in the breakdown on the supplement that Mr. Enriquez is talking about? In other words, these payments that it shows that we have to cover that debt of 1.4 million before we can do anything.
This report, what we were going to present would be a breakdown of what was spent. And so we would go back and dissect that 4.6 million into what had been spent. So I don't see how we can incorporate what you're asking for, Mayor. We can break down here what was expended, because this is a report on the results of operations. So we can break down this is what was the delineation of this amount and show what was comprised of.
Okay? That'll
Okay.
work.
Okay.
Any other questions? All right, thank you. Thank you, Mr. Garza, appreciate it. All right, this item doesn't require any action, so we'll move on to number 7. Discuss and consider amending the corporation's 2017-2018 budget for the primary purpose of transferring funds into the Santana Manufacturing Project Refinancing Series 2015 Reserve Fund account of the Debt Service Reserve Fund relating to the EEDC's outstanding Series 2015 sales tax revenue bonds in an amount sufficient to restore the required balance in such account and authorizing the executive director to take all actions necessary to accomplish such transfers and approve all necessary disclosures relating thereto. Mr. Trevino?
Yes, sir, President, members of the board. We have Mr. Tom Spurgeon here, our bond counsel for the EDC, and Jorge Garza, the senior manager director for Estrada Hinojosa Company, the bond consultants for EDC. And what Mr. Garza had presented earlier about the discrepancy in the payment of that reserve fund, I asked them to come and explain it better to the board so they can understand how that was done and
Okay, appreciate it, sir. Yes, sir. Can I state your name for the record, please?
Yes, Mr. President, members of the board, ladies and gentlemen, I'm Jorge Garza, a Senior Managing Director with Estrada Hinojosa and Company. In 2015, we served as financial advisor to the Economic Development Corporation. I was asked by Mr. Trevino and Mrs. Garcia to come brief you on this item. On February 15th of this year, about a month or so ago, I received a call from Ms. Ramirez asking for directions on which fund to draw money from to make the payment on the $13,715,000 Edinburgh Economic Development Corporation sales tax revenue refunding bonds, taxable series 2015, Santana Manufacturing Company refinancing. Those bonds were issued and delivered on March 25 of 2015. Those proceeds were principally used to pay off a loan that the Economic Development Corporation had outstanding at that time. Represented to us that the proceeds of that loan, that bank loan, went to Santana Manufacturing Company.
Excuse me.
And
Excuse me, I'm sorry for interjecting, but just real quick. And that bank that we owed the money to was, which bank was it? I think it was Lone Star Bank. Lone Star, okay. Lone Star National Bank? Okay. All right, proceed, thank you.
So did this package end up in their documents? Yes. I believe in your documents there's a package. The best way for me to walk you through this is to tell you what was created with those monies, and then what accounts were to be set up, and then the normal use of the accounts. The phone call I received on February 15, as I inquired, I said, well, what did you do in the past? And the answer was, I drew the account from the monies from the account that I was directed to from the executive director. As I probed further, I learned that the monies previous to February 15, 2018, had been drawn from the reserve account. It appears from my learning that it was truly an oversight. Take it from the bond money account. It appears that no proper accounts were established when the bond money was delivered. And therefore, at the time that they first drew on the money, which would have been the first payment that was to be made, was in February 15 of 2016. Then again, semi-annually, August 15 of 2016. And then again twice in 17, February and then August. The following payment would have been February 15 of 18, and that's when I got involved. I suggested that the reserve fund not be used and to draw from the operating account. We talked a little bit further. I learned that the operating account, is kind of where normal operations are done. I said, there's no harm if you pull those monies out of there and make your payment, but you must make your payment. So then I did my investigation, and I came back with these documents. First of all, this is the cover of the large official statement. It's the document where the Edinburgh Economic Development Corporation discloses the bonds that are to the bond community, what it is borrowing and for what purpose. To document that, this board, not you all, but the Economic Development Corporation, passed a resolution. That resolution, it was a bond resolution. It describes all of the activities that are to be taken place. In section 8, for instance, page 22, it creates the revenue fund. It says all monies that are to be received must be deposited in a revenue fund. It says also create a debt service fund, section 9. Section 10 says create a reserve fund. And then it continues to walk through that.
Let me just interject real quick, because you mentioned that it was an oversight that they were using the reserve fund, that you feel was an oversight.
Yeah, if you don't set these up, then I don't know how you know where to draw from. The instructions
Well,
are...
that's
yeah.
the point I'm trying to make, is
Right.
that with the information that was given to us on Friday, I was able to decipher that, you got to create a reserve fund, because it specifically states, and I'll read you the main component of it, where it says, there is hereby created for the benefit only of the holders of a particular series of parity obligations.
That's correct.
Which in the way I interpret that is that this reserve fund is specifically for the bondholders to make sure that their interests are covered.
Correct.
If for whatever reason we don't have the money to pay the bondholders, that money is removed or taken out from this fund. Is that correct?
That's correct.
Okay, so
And there are...
the bondholders, I would think, would have to be given some sort of authorization by either, in other words, they should have been notified that the reserve fund was being depleted. At least that's my interpretation, because they are the ones that really this reserve fund is for.
And there is a procedure that deals exactly with that, and I will walk you through it. First of all, the use
were
of
they
the...
notified? Was the bondholders notified that the reserve fund was being depleted to pay rental payments for Santana Textile?
We didn't notify him, your financial advisor.
Okay.
I'm not aware that bond counsel notified him. I haven't heard that the staff notified them, so I would guess they were not notified.
So as of right now, they don't know that there's not enough money in that reserve fund.
That's correct. I
to
found
cover.
out on February 15 of this year, and so I've been trying to get this because we have a material events notice to file, which says that we violated one of the 11 action items that must, within 10 days of a violation, be filed with EMMA, the Electronic Municipal EMMA. Market access. It's where the public can go to find out information
About all the
all bond issues.
bonds. All the
bond
bonds.
issues.
Right.
Anything that's a security, you can find information on.
And so this board right now is being tasked in line item number 9 to create that reserve fund, to create an actual reserve fund that should have been created when this bond issuance was established.
Yes.
Correct?
Go
So
back.
we're doing this 3 years after the bond issuance was sold.
Yeah.
Okay.
Might add real quick, I think, I'm Tom Spurgeon with McCall Parker, so for bond counsel for...
Yes, sir.
for the issue.
Can you speak on the mic?
Yes,
please?
sir, I can.
Thank you.
I believe, and Jorge may know this better, or Nelda might, but I believe there was an account of some sort set up with respect to the bond proceeds that were put in for that reserve fund purpose. Because I think there's something on your 15 audit that says something about temporary reserve.
Yeah.
And he'll get into that in a second. But your reserve fund itself was funded with bond proceeds, so they went somewhere. You know, they probably went into an account, but they might have been not clearly marked as being not a temporary reserve, but they're a restricted reserve. They can only be used in the event that you have financial difficulties and you can't pay it from other funds.
Right.
So what you're being asked tonight is to restore that, to bring that back whole. That's kind of where we are.
And to establish a clear account.
Correct.
So everybody will know that this account is off limits, not supposed to
Correct.
use it.
Right.
Unless there's something catastrophic that happens that we cannot pay
That,
our
exactly.
regular bond payments.
Exactly.
Okay.
Right. You bet. I didn't mean to interrupt. Go ahead.
No, that's fine. And at the back of the resolution, in your packet, in pages A1 and A2,
What
excuse me,
page?
I believe it's all the way to A4.
What
sir.
page, I'm sorry?
Page A4 of the resolution, I attached an exhibit. There was this document, and on A4, it gives you the deposits that should have been made with the proceeds. These were done. $1.4 million went into the reserve account. $9 million was used to pay Lone Star Bank. There's the name of the bank. $2.4 million was paid to the state of Texas to refinance
It was another loan.
Texas Leverage Loan Fund.
So there was another loan,
There was another loan, yeah.
and that loan was payable to whom?
To the state of Texas.
To the state, the state of Texas, okay. Was that for that, or what was it, enterprise fund, or
Yes, Enterprise Fund.
Yeah, Texas Leverage Fund loan.
Texas Leverage
Right.
Fund? Okay.
Texas Leverage Fund.
Because they didn't meet their obligation originally, we had to pay that loan off. Because they would have been Santana would have been able to keep that money if they would have met the conditions of that specific grant. But since they didn't meet their obligations, the city of Edinburgh, or the EDC, was obligated to pay back that loan.
Yes.
Okay.
Yeah. This corporation served as a backstop for a lot of loans, and this is exactly what happens. And when they don't settle, it comes due here.
Right.
In
Mr.
the
Borgia,
audit of 20...
really
Yes.
quick, because we do have a relatively new council. When the certificate of resolution was made,
Yes, sir.
it's here it was made on the 20th of January. Is that when it was made?
Yes.
And just for the record here, the current board at that time was Richard Garcia was the president, Fred Palacios was the secretary/treasurer, Stephen Cruz was on that board, Felipe Garcia, and Dr. Javidan Rodriguez. That was the board that did this.
Correct.
Okay,
That approved the resolution.
yes.
Approve that resolution.
January 20th, 2015.
So the proceeds were deposited according to the resolution. The accounts were not set up, which you read
Right.
there. The accounts those accounts, I can't find them in your audits, but the proceeds were deposited in a reserve fund. And in 2015, the audit shows that there was $1,467,000 in the reserve fund. The problem is that sometime during 2016, they drew down from that, and by the time of your 2016 audit, you had $797,000 from $1,400,000 to
So half.
$797,000.
Roughly
about
half.
And as I understand today, there's $147,000 in that account.
So there's 147,000 as of today?
126? 126,000.
126,000. So is that included as part of the notes in the, well, we can't go back to that.
You can just ask the question.
So is that included in the notes, in the draft of the audit, to where that 126 is the reserve fund? What do you say?
In the financial statements.
Yeah, it's on the financial statement, but is it in the notes? And the reason why I say that, Mr. Garza, in the notes is because of the fact that, a lot of people will see that number and it really doesn't mean anything unless there's some backup information to it. And that's what I would like the notes to explain, so people can know exactly where the money is going.
It's listed in total, notes it's
Could we add that also? Okay, thank you. I'm sorry, Mr. Garza. The other Mr. Garza, I'm sorry.
That's okay.
Garza 2, right.
Yeah. So, because you're here at the end, at an audit period, you're about to accept a report. Right after we spoke on February 15, we set up a call with bond counsel and with Mr. Garza, the auditor, and your staff to figure out, is there any way we can kind of finish this and clean the book up and not have to deal with it the following year? And so I suggested that if the board would be willing to put the reserve fund back, and a note was written that, this was done, but the monies were there, or, as the footnote he's put in, we can close this audit this year, get the city to close out their audit also, and we move forward with a new reserve fund so that when the corporation files its 15C212 a material events notice, it says we withdrew monies from the reserve fund. It was a technical oversight. The monies are there. See the audit. The accounts have been set up to this not to occur again. We're trying to kind of create a path where you can bring this to an end at this audit and be able to move forward. So that's why the critical of pushing you all to a deadline, by the end of this month, is because your audit and the city's audits are inside that 6-month deadline, and we're right there at the last dates.
Okay.
So thank you for your consideration on this.
No, thank you.
Yeah.
Any other comments from the board?
Yes, my concern is, we have to have 2 bond payments in there at least, or is it just 1 bond payment on that reserve account?
The reserve account is a requirement of $1,467,000, with change. It is an actual dollar amount. It's equal to the last year's payment. It'll completely eliminate the last year's payment. Or if you ever have to use it because of, tornado or hurricane or something that wipes out reserves and what have you.
Something catastrophic.
Catastrophic, yes. Yeah, there's actual language in here that it says that the use of that account is when there is not sufficient money available in the debt service fund, which is the right fund, the right account, or to pay the last installment.
And if
Okay.
you ever do draw down on the reserve fund, there's an obligation to repay it.
I'm sorry?
If you do draw down on the reserve fund, there's an obligation to repay that over
Right.
time.
You
Just-
always have to keep replenish
Correct.
it. Replenish
That's
it,
correct.
even if you have a catastrophic event, you have to replenish
You
it.
have to, correct.
Okay.
Right.
So, Mr. Spurgeon, my question to you, were you ever advised by our former executive director if this was allowed, that they would be able to deplete the reserve fund and pay bond payments
No,
from?
we were not. We were not asked anything or knew anything about it until actually Mr. Garza called me shortly after talking to Nelda in
So-
February. So
so
no,
are-
we were not aware.
So would we be considered, would the EDC be considered in default or in breach of the bond issuance contract, or what?
Technically-
Give me the legal ramifications.
Technically, you're in default because you've pulled from the reserve fund, but to us, it was an inadvertent error. It was, as Mr. Garza mentioned, the money was there in other accounts. It should have come from other accounts. And I don't think Mr. Garcia was maybe thinking about exactly what fund he was saying to pull this from or what that fund was used for, but it is a restricted reserve fund, can only be used in case you don't have other funds available to make the payment. I truly think it was inadvertent. I don't think there was anything malicious or underhanded on his part or things like that. It was just an inadvertent error. that was pulled from there instead of other available funds.
Right,
So,
right, but the point of the matter that I'm trying to make, and you're absolutely right, there are probably no malicious intent involved, but let me just say, it is in this certificate of resolution that was passed, it stipulates, without a shadow of a doubt, all the procedures that the EDC needs to follow and has to follow.
yes, that's correct.
So as long as you're reading it, and if somebody took the time to read this document, there is no way that someone should not have known what the procedures were. So we could make sure that we're following the legal basis of this contract.
I'd agree with that.
Okay.
The contract
Okay.
or the
All right.
the resolution makes it clear in terms of how the flow of funds work and what those funds are used for.
Okay.
Right.
So going back to the reserve fund, paying payments, rental payments, let's say Santana Textiles doesn't pay us their monthly payment, okay? This reserve fund cannot be utilized for that. City or the EDC cannot say, you know what, since I didn't get it from Santana and I don't want to take it from my operating account because I have these projects that I need to deal with, I'm going to take it out of the reserve fund. We can't do that.
That's correct, you cannot.
Okay, so I want to be perfectly clear that
Right.
we could not do that.
That, you cannot do that.
Okay.
The reserve fund is only used because the pledge that's securing these bonds, as with those other two bonds, is from your sales tax revenues. And that's the source. The fact that you're not receiving rental payments from Santana doesn't entitle you to pull it from the debt service reserve fund. You're supposed to be using sales tax monies to pay it. Now, if you had rentals coming in from Santana, you can certainly apply that to what you would normally be paying into the debt service fund, but the fact that you don't receive it doesn't entitle you to pull it out of the debt service reserve fund.
Okay, so that leads me to my next question. So Santana defaults. They have a change in guard and they decide, you know what, it's not working, we can't maintain operations, we're going to close up. They have no obligation to pay this bond.
They do not.
EDC has 100%
Correct.
obligation that they have to pay this bond.
That's right.
Okay.
Correct.
Mr. Spurgeon, I have a question.
Sure.
This started off as a Santana Textile project, and then one day I hear it's not called that anymore, it's called Denenberg. How does that work? If they've changed names or ownership, we're the ones on the hook either way, I understand that. But who is responsible for this, Santana Textiles or Denenberg?
I'm not at all familiar with maybe a corporate change that took place with Santana. I'm assuming that in any kind of a corporate merger, the surviving entity continues to have the responsibility for all the obligations of the entities that it's acquired. So I'm assuming that if Denenberg, again, I'm just not familiar with any of that, but I'm assuming that the surviving entity has full responsibility under the contract they have with you all.
I do want to just read this. I gave the board members, but it does say that when this was done, there was an absentee. For the record, Dr. Javidan Rodriguez was not at the meeting. But I do want to read this. Resolution authorizing the issuance of up to 17,500,000 in aggregate principal amount of Edinburgh Economic Development Corporation sales tax revenue refunding bonds, taxable series 2015, and it's in parentheses, Santana Manufacturing Project refinancing, delegating authority to certain officials to approve all final terms of the bond, approving an official statement, and approving and authorizing the execution of paying an agent/registrar agreement, a purchase contract, and all other instruments and procedures related to, and they voted 4 yes and 0 no's, 0 abstentions. So basically, the total amount was up to 17,500,000?
Sure. Let me explain that real quick to you. When these actions were taken in January, and there was a meeting in January where there were a number of different resolutions that were all approved at the same time. This is all related to the arena financing. And part of the components of that arena financing involve the EEDC, because the EDC is really sort of the anchor, if you will, not in a negative way, but it's sort of the source of, the real sources of security in connection with the arena transaction, because you have a historical, proven source of revenues that the market can rely on year after year. The primary source of the arena financing, or the initial source rather, is from TERS payments, and that will eventually, everybody's expectation is that the TERS payments out of TERS 1 and TERS 4 will be sufficient to fully pay the debt service on the arena transaction. But until that time, the EEDC is an extremely important partner in that transaction. This transaction was done in order to essentially free up free the obligations that the EEDC had, because if I recall, there was a balloon payment on the Santana loan. I forgot what year it was, but it was a nut that was very, very difficult to overcome. So we had to kind of clear all that up, issued the refunding bonds. All of those transactions were done in January of 2015, knowing that we would end up going to market probably in early March. So in all of the resolutions, there's a maximum amount that can be issued, but authority was delegated to officials of the city or of the EDC, depending on who the issuer was, to approve all the final terms. So when we get closer, or when we get to the actual sale date and the numbers are more firm as to how much is going to be needed to refund this debt and those things, that's why it went from $17.5 million as a maximum amount versus end up issuing like 13.7.
So 13.7 is the number.
That's the actual debt.
That's the actual
Right.
debt.
That's the actual debt that was
Okay.
issued.
And just
Correct.
to clarify some of the things that you mentioned regarding that the EDC is on the hook for a lot of this, the arena and the Santana. There's three components that are involved here in terms of where the money's coming from to pay off this debt. And from what I understood from reading and the discussions that I've had with different people is that there's the first line of defense, for lack of a better term, is the sales tax and property tax for the TERS 1 and TERS 4. And then if that doesn't generate enough to pay the bond payments, then the second line of defense would be the EDC's sales tax, or I'm sorry, right? Is it the EDC
Right.
sales tax? The EDC sales tax, and then the third line of defense, if there's not enough money to pay those bond payments, with those two components, the third line of defense would be the city's sales tax.
Not
Or am I
quite.
missing?
Not quite. I kind of break it into sort of three different buckets. The first would be TERS revenues, which is property tax, coming out of TERS 1 and TERS 4. That's the first. All property tax revenues are on the tax increment. The second is the city's, it's 1/2 of the city's 1% sales tax that they collect out of TERS 1 and TERS 4. So that's sort of the second bucket, a sales tax bucket. And then the third bucket is the Economic Development Corporation. To the extent that those other two aren't sufficient to pay full debt service,
Then the EDC pays.
EDC pays the balance.
So that is
Correct.
why we've paid these payments, because those first two components
That's right.
haven't been able to have sufficient revenue to pay for those
Right.
bonds.
And there was an expectation, even going into this back in 2015, that it would take a while before the TERS payments would be sufficient, TERS and/or the city sales tax. Eventually, the expectation is that as both of those TERS zones develop more, that the expectation or the hope certainly is that the TERS payments themselves will be sufficient and completely free up the sales
Correct.
taxes back to the city, back to the EDC.
Correct, and that's the optimal position that we
right.
want to be at.
Correct.
But we just don't know when.
We don't know when.
It could be 3 years from now, 5 years from now, 10 years from now,
That's-
30 years from now.
It could
You know,
be.
we have the shops there in Edinburgh, on Trenton, that TERS was created back in 2007, I
Right.
believe, and it's been 10 years, and we still haven't fully developed that area. So
Right.
it's a lot of speculation, and that's why we need to be cognizant of the fact that it's speculative. You know, development, you just don't know where it's going to happen.
Right.
And of course, we want this to succeed, because if the TERS succeed, we succeed.
Right.
And we're going to do everything in our power to make sure that it succeeds. But we also need to go back and do what we need, and that's basic services for our community.
Right.
You know, so I appreciate you coming here. If you have any further comments?
No, I have no further comments.
I have a final question.
Yes.
Speaking to Mr. Garza, Mr. Spurgeon, in that sequence, you said notes were going to cover us from this day forward as far as an audit to justify and move forward and correct these actions and do it. How is that legally, or how are we legally moving forward? What if we are in default? Or what documentation are we going to have that moving forward, those notes are going to be sufficient? And all the
Well,
discussions
okay.
that you just talked about.
The first thing that you need to do to kind of move forward with the plan is to amend your 2017-2018 budget to permit a transfer to replenish the debt service reserve fund. There are, I think, a couple other items on the agenda to establish the accounts and those type of things, but all of those combined will get you back to where you should be, where you're fully funded, and then you can move on at that point.
Then we'll know exactly how much money we have, basically,
How much you have
for,
left.
for this operating year.
Correct,
Yeah.
right, correct.
Can you just
You bet.
describe technical versus a real default?
Okay, all right, yeah, go ahead, go ahead, it's a good point.
The point that we need to understand is, this is, a default is you didn't make a payment.
Excuse me?
And a default typically means you didn't make a payment. That's not the case here.
Right.
You have made payments. We have what's called a technical default.
The
We
10
drew it
days.
from the wrong accounts.
And the 10 days.
And that's what we want to clean up. Still, it's not something that we want to be doing, but it's a technical default.
Well, it's not good practice.
It's not good practice.
business practice.
No, there's a real procedure on
Right.
keeping us
Right.
safe.
And,
Yeah.
and not only that, but, I mean, the taxpayer need to know where their monies are being utilized. I mean, they cannot just be blind to it. I mean, that's why these mechanisms are put in place, is so everybody can know where the money is going.
But moving forward, these actions are going to absolve us moving forward. The EDC, I don't know about absolve, but you know where I'm getting at. Moving
In terms of
forward.
legal,
Legal or whatever the case may be, because of the 10-day notice you mentioned and several other things.
Yes, and when he was referring to the 10-day notice, we essentially chose at that point that, because we knew you would be considering some sort of corrective action, that we will be filing a notice to notice the market that something like this had occurred, but you're all back in sync. There won't be an impact to you, the fact that that you are back to where you should be and things, but we'll file that notice as soon as the transfers are made.
And can we have all that in writing so that we can have documentation? set forth?
Absolutely, you will get a
Please.
copy.
Yes.
You'll get a copy of when it's filed with what we call Emma, we was talking about before.
Mr. Spurgeon, one question.
Yes, sir.
How long do we have to replenish this fund?
It really should be done, frankly, before your audit is filed, because your audit it wants to reflect the fact that your funds are fully funded.
Well, on part 3, it says the funding deficiency of the account gives us the pledged payments for 60 payment. Is that
For
to replenish the reserve?
yes, that's that one item on the agenda about replenishing that.
So we
and-
can do that in a 5-year?
No. But to replenish that needs to be, no, that's sort of a different item. I know where you're reading from.
Yeah.
That would have been, had you have made a draw on that reserve fund because of financial difficulties. But when it's pulled out of the fund inadvertently, it needs to be refunded, or needs to be replenished right away.
Right away?
Right.
Okay.
Correct. That's a good point.
I have a question. It's saying here the maturity date, on the year 2025, it says principal amount, $1,870,000. It's got an interest rate of 3.58. The year 2030, $5,285,000. It's got an interest rate of 4.13. It's got the year 2035,
Right.
$6,560,000, and the 4.5 interest rate. What does this entail here? Just
Okay. Either me or the, Mayor, those are all what we call term bonds, and he'll actually do a much better job of explaining why some investors want to buy a term bond as opposed to what we call a serial bond. But each of those term bonds actually are having a principal payment with what we call a mandatory sinking fund redemption every single year. So you literally won't have in the year, you won't be paying $5.2 million in 2030. You would have paid a certain amount of that principal in 26, 27, 28, and 29. And so they were just sold as what we call term bonds instead of serial bonds.
So basically, the 13 million of this bond, how much, when it's all paid, how much would the total be?
You mean
Principal and interest? Yeah, the amortization of the whole entire bond, how much?
I don't have the full OS with me.
You don't have-
It's in the official statement that lists
Okay.
the entire amount, debt service every single year. Neither of us have that in front of
Okay,
us.
no problem.
Let me explain to the mayor. Mayor, we have 20 payments, 20 years of payments.
so
And
we got to pay this for 20 years.
yes, sir, this is
Like a-
from
like a mortgage.
2015 through 2035. It runs for 15.
So-
There were investors who wanted 10 years, bonds maturing in 10 years, and there were investors who wanted bonds maturing in 15 years, and those in 20 years. So we added years 1 through 10, which equaled $1.8 million, and offered those to that investor, but it's still installment payments up to the 10th, and then 15 through 20, we added them up and called them another term bond to match an asset and a liability to that investor who's looking for that, and then we did it again with 20 years. But you still have 20 payments. We
20
just
years.
grouped them.
20 payments through 20 years?
Yes, an annual principal payments, 20 annual principal payments.
And it's generally set up as average or generally equal payments every year. You're not going to have any balloon payments. Again, we don't have the debt service schedule in front of us, but I'm pretty confident that the
It's low.
average, or that the annual debt service payment is very close to, I'm sorry. I'm pretty confident that your annual debt service payment every single year is approximately the same every single year. But I don't know exactly what that would be without the full OS with me.
Can you tell me why a bondholder would want it that way, 10, 15, 20?
Yeah, in the case of an investor, he is willing to lend Edinburgh Corporation money for 10 years because he has something that's due to him, and so he'll want his money back at the 10th year. So it's like investing it out for 10 years or 15 years, and he's got a matching.
So it's a
asset
personal
and liability.
preference on the
Yeah.
investor?
Yes, yeah.
Okay. All right, any other questions? Gentlemen, thank you. Spurgeon, Mr. Garza, appreciate you being here. Thank you very much. You've given us a lot of information that was well needed.
Okay, happy to help.
Thank you. All right, so we have action on this item. I need a motion
For an item 7? Is that-
on item number 7. This is basically to replenish the funds.
Motion to approve the act.
How much, we got a motion by
Motion,
Mr.
right.
Torres,
To approve
second by Mr. Salinas.
on,
Any discussion?
on the recommended action that Mr. Trevino is recommending, right?
Right, yes. So what is the amount that we have to replenish exactly?
Our balance right now is 126,000 left. So you subtract that from 1.467449.75, we got to replenish 1,341,449.
Say that again?
$1,341,449.
So then
To replenish the
the reserve fund?
reserve fund.
The debt reserve fund?
Correct.
Okay. All right.
Just for the record here, we are replenishing money. Nobody was on the board when it happened, and we're just fixing the voluntary, involuntary mistake of the previous administration. I
So
just
we'll
want
have to, I think we have some other items at the end of this agenda that can address our budget, amending our budget, and some,
And taking this into account?
and taking this into account, and some funding, some other certificate CDs that we have out that we can put into that.
Okay. All right. Any further discussion?
No. You have a second?
Yes, we have a second. We have a motion and a second. All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. Item approved. All right, we're going to go down to number 8, discuss and consider authorizing the executive director to transfer certificates of deposit from Lone Star National Bank for the following amounts. Account number 45046299, $837,150.47. Account number 45005444, $13,554.61. Account number 45006805, $13,903.04. Account number 45004485, $9,270.50. Mr. Trevino?
Yes, Mr. President, members of the board, we have these CDs currently in Lone Star National Bank. My recommendation is we take these out and put it into our budget, to decide where we're going to put that into our replenish this account. That will be part of it. It's not going to take it all. If we were to use all this money in these CDs, we would still be short $467,571. So
Okay, so this is just to authorize you to take it to our depository?
Correct.
Because Lone Star National Bank isn't our depository?
correct. We take these out of CDs and
And put it in our depository
Yes, sir.
bank, which is Plains Capital?
Plains Capital. Yes, sir.
Okay, so that's what this agenda item is?
Yes, sir.
All right, and there is no penalty to?
No,
to withdraw?
they're all available to
They're all
withdraw.
available?
Yes,
Okay,
sir.
good. All right, so do I have a motion?
Motion to approve.
I have a motion by Mr. Salinas. Do I have a second?
Second?
Second by Mr. Torres. Any further discussion? All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. Item approved. Number 9, discuss and consider authorizing the executive director to open a reserve fund account and debt service fund account at Plains Capital Bank for the primary purpose of compliance with the Santana Manufacturing Project Refinancing Series 2015 Sales Tax Revenue Bonds requirements. Mr. Trevino.
Yes, Mr. President, members of the board, I'd like to get authorizations to open up these accounts based on what we just heard from our bond counsel and our financial advisor. It was supposed to be made in the first place, and so we can be set and accommodate these bond payments in the bond reserve.
All right, do I have a motion?
Motion to approve.
Second.
I have a motion by Mr. Torres, second by Mr. Salinas. Any discussion? I have a couple of questions. So,
I just want to say real
Go ahead.
quick, this is somewhat shocking, but yet it's frustrating that we have to fix these issues. But I know that, as much as I want to say we have to fix the issues that are happening here, and this doesn't fall on anybody that was here or the board that didn't have time to do this, but now I know why, because once they get in and start digging, they see that there's a lot of issues here. So I just want the record to show that none of this was done by any of the gentlemen that are on this bench or the previous board. This was done through the old administration, And we're just trying to do the best we can with what we have in front of us, so I just want to make that comment.
All right, thank you. Thank you, Mayor. All right, I have a question. So, once we establish this account, is there any parameters that we have to include with the banking, the bank? Like any parameters in terms of, you know, you're not to release this money unless you have certain individual requesting the removal of the funds from this bank account? Is that something that we can do, gentlemen back there? Mr. Spurgeon, Mr. Garza?
Yes, sir. In fact, I believe the resolution even says that withdrawals are made under the authority of either the president of the board or the executive director. I'll go back and double check that. I don't actually have the full resolution with me. I thought I did, but I don't. But there are restrictions in terms of how that's pulled. And for the most part, you've got the authority without separate board approval to making your debt service payments. Other types of pulling out of those funds you would kind of do with normal board action. But because you have a requirement to be paying debt service on a timely basis, that typically there's authority to do that prior to each interest and principal payment date.
Okay, so then the only two people that would have authorization would be the executive director or the president of the EDC?
And I think the assistant executive director also has the authority.
Okay.
If I recall, I'll double check that again. I don't have my full resolution with me, but I'll double check it.
Can we set up in-house procedures that?
You can absolutely do that, right.
Yes.
And let me just mention one other thing too, because when you're talking about setting up a debt service fund, you should have a debt service fund already established in connection with those two other sales tax bonds that are outstanding.
Which we don't, probably, because I haven't seen it.
Because these are considered parity bonds.
Yes.
With those outstanding 2013 or 2014 bonds. So there's really one debt service fund securing all three of those. And that's where, well, the revenue fund is set up for all sales tax revenues. Debt service fund should be associated with your debt service payments related to these bonds and those prior bonds. The debt service reserve fund is only with respect to the Santana bonds, to the 2015 bonds. So just to make a clarification in terms of, I'm not sure where your debt service payments are going now in connection with those other bonds, but you should be transferring on a monthly basis 1/6 of interest every month and 1/12 of principal coming due. Every month should be going into that, so it's built up over time so that you have the payments to make the payments on the payment date. So I just wanted to clarify in terms of the debt service fund particularly.
Basically, just follow the bond issuance.
Yes.
The resolution, I mean, that's basically what you're saying.
In a nutshell, it's kind of like a funnel. We get our payments in, and it
And
pays.
it goes through the
everybody
flow of
first.
funds.
It
Exactly
flow of
right.
funds, and at the
Right.
end, that's our operating account.
Exactly.
At the
Right.
very end, that's what
Right.
we operate on.
Right. Exactly. Okay.
So, can I remove myself from this? I don't want to have my name to be on there to sign off on any kind of reserve fund or money being removed, or can that be amended to where it's not the president of the board, it's strictly the employees of the city, which is the executive director?
It's not so much a shall, but may, where you are allowed to do things. It's not that you shall. So I mean, I think it can certainly be done by this. But again, I'll double check all that in the morning when I get to look at the full resolution.
Okay. Because I could be removed any day.
Well,
You know,
but your position would still be there. So
I could be recalled any day now, and so it doesn't, you know, I just want to make sure that it's taken care of.
it would be taken care of through whoever's holding that current
Okay.
office.
All right,
Correct.
appreciate it.
You bet.
Mr. Spurgeon, really quick, you're saying that it has to be more of an internal policy amongst us? Or is that written through your agreement?
No, I'm-
Because I would prefer that if we're gonna do any policy, whether you're gonna do it or we're gonna do it internally, that something like this, if they're going to look into dip into those funds, maybe being like Mr. Garza had said, something catastrophic, that it come to the full board?
Okay, that's a little bit different matter, if I'm understanding yourself, Mayor. The bond resolution is related strictly to your debt, but because of the importance of the debt, it sort of sets up your financial structure where all your revenues go into one fund, and then you pay out of that fund every month. And these are essentially automatic transfers, taking no further board action, where you transfer a specific amount going into the debt service fund every month, and into the reserve fund if you need it, which you won't. You'll be fully funded. You shouldn't transfer anything more to the reserve fund. So those type of payments are automatic. Once you get to the bottom bucket in terms of your operating revenues and all that is where it goes back to your board, and you make directions and when you pull money out of that. But with respect to covering your debt service, that's an automatic deal that would just be transferred by your staff on an automatic, or every month.
All right. Okay, thank you.
You bet.
Thank you. Any other questions? All right, we have a motion and a second. All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. Item approved. Number 10, discuss and consider possible action the EDC fiscal year 2017-2018 budget. Mr. Trevino.
Did you want to move this to the end of the after our executive session? Personnel? Who's that?
Yeah, we'll do that. We'll move it down if it's okay with the rest of the council, the board. All right. Item number 11, discuss and consider ratifying the following February 2018 EDC bond payments. We have Ebony Hills Golf Course Project Series 2013 A bond, $246,286. Parks and Recreation Building Project Series 2013 B bond, $485,844. Santana Manufacturing Series 2015 bond, $381,896.75. LGFC Entertainment Center Edinburgh 15A bond shortage, $190,826.88. LGFC Entertainment Center Edinburgh 15B bond shortage, $145,333.22. Mr. Trevino.
Mr. President, members of the board, this is an agenda item I put on there to ratify these payments, specifically so the board understands we need to make these payments. We don't want to go through what we just discussed, these last few items. So in the future, I will bring this to the board, all the bond payments that are pending and coming up, and schedule that immediately. So I just wanted to we did have to pay these bonds, these payments, when they came through. We got an email from finance director. So I just wanted to ratify this, but to make it clear that from now on, we are going to bring these bond payments up to the board for approval.
Okay, and just for clarification, D and E, which are the arena bonds, the $190,826 and the $145,333.22. This is the shortage. This is because the first two components of the revenue generating, payments, we didn't meet, or they didn't meet the bond payment obligation, so now the EDC is having to take care of the shortfall.
Yes, sir, that's correct. As he explained, it was the TERS money was the first bucket. The second bucket was the city's half cent, right? And then now we're on the third bucket.
So they got through the first two lines of defense, as Enriquez had said earlier.
I'm the big linebacker here.
They're already in the secondary.
Yeah, they're in the secondary. So then from now on, we're going to, for our next budget, fiscal budget, you're going to include all these numbers,
Yes.
right?
The next payments will be scheduled, and they're scheduled as per the bond agreement.
Right.
We're going to have to do it. So prior to that, I want to have an agenda item for the board to understand that we are paying these bonds.
Right, but my question is, we're going to include either these amounts or something close to these amounts every fiscal year, so we'll know
Correct.
exactly how much money we're spending on these 5 bonds?
Yes, sir.
Okay.
I think he's gonna want us to ratify every payment every time we pay. Is that what you're saying?
Yes, sir. Just-
Oh, okay. Well, that's when we are about to pay it.
Correct. Yeah, and this is, we've already paid this.
Paid
We're just
before.
ratifying this, but I wanted to make sure you understood that this is, we want that clear and the public to understand
Right.
that these payments need to be made.
Okay.
Mr. Trevino,
Yes, sir.
we're gonna have to make these payments every year?
Yes, sir, twice a year?
Every year, twice a year?
Yes.
And,
So is this just one payment? This is the first payment this year on all
The
these?
February, is that correct? Okay.
Okay. But this is the first payment of this fiscal year?
Right, February.
Okay.
February and talks.
For all 5? Okay.
Motion to ratify.
Second.
for how many years do we have to pay this?
So
2035?
I know D&E, I
2045.
know D&E is 30 years. Santana is 20 years. Parks and Rec was what, 10 years? Or was it longer? How long?
Five.
Okay. Okay.
I'm just seeing which one we're gonna clear first, so maybe we can get rid of some of that bad debt. Get on to doing some projects. So
right.
all of them have different years, terms, okay.
And then in the following pages, there's some backup of all the payments that were made from the planes. From the
Okay.
different accounts.
So we have a motion. So the total bond payments is 1.450. And we have a motion by Mr. Torres, a second by Mr. Salinas to ratify those 5 bond payments. Any further discussion? All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. Item approved. Number 12, discuss and consider authorizing the executive director to enter into a professional service agreement with Hilltop Securities. Mr. Trevino?
Yes, sir, Mr. President, members of the board, as you recall, presentation was made by Mr. Chris Vela from Hilltop Securities at our joint special meeting with the council and the EDC on March 10th. And they discussed the financial positions of the city and the EDC, and the EDC received a proposal for the agreement for continuing disclosure services with Hilltop Security for EDC bond debt. The annual proposed fee would be $3,500, and the copy of the proposal is attached to you. Questions?
So we're financial advisors, so they can give us input on where
how
we
we
are
go
financially and how
financial.
we're going to fund future projects.
Yes, sir.
Parks, any other projects that
Any
we
new
might,
projects come in, yes, sir.
any
Bond.
business
And
development projects that we have,
and advise us on our current ones.
and advise of our current, okay.
Motion to approve?
Second.
We have a motion by Mayor Molina, second by Mr. Salinas. Any further discussion? All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. Item 13, discuss and consider adopting the Small Business Incentive Program for the Edinburgh Economic Development Corporation. Mr. Trevino, excuse me.
Yes, Mr. President, members of the board, attached, we've proposed a draft of the Small Business Incentive Program renovation and improvement policy. I think it's something the mayor had brought the ideas to us, that if we can assist small businesses in the city of Edinburgh that have been in business for more than 10 years and have paid sales tax into the program for more than 10 years and have some employees. And what I propose is that 10 employees, 5 had be classified as full-time and be current with all city, school, and county, state, federal taxes. And with this program would allow certain individuals in the city that qualify to do exterior improvements and maybe some interior improvements of their businesses just to get them going. The grant amounts would be maxed at about $10,000 with some indication if they needed some funds once we get all the correct information in and have a development agreement approved, and they needed maybe some seed money up to $2,500 to start the work. And then if, for instance, if another project came in that needed more than $10,000, they could possibly come in, get the requirement of $10,000, say it's a $20,000 project, and the next $10,000 would be matched 50-50. They come in and we'll match $5,000, and they come in with the other $5,000 to total $20,000 in improvements. This is the first stab at it, and I know the mayor and the council, we discussed that at the workshop, and I just wanted to present this to you to get some feedback if this is along the lines that you feel this would be successful in the city.
Absolutely. I think it'll be successful if we have money to spend. But where we're at, and just so that you guys know where I'm coming from, because this is something that we all ran on, the new board and myself, was the previous administration had given away $1.5 million to one particular development. Those of you that have driven around the east side of Edinburgh and even the west side, you could see that some of these businesses need help. So the way it works is those that pay sales tax, specifically the sales tax, or through retail or through shopping, through dining in, that money in the past has gone to one giant, and what we're looking for is we're looking for a beautification plan to help some of these businesses that have served the time. Like Mr. Trevino said, we're looking at people that have been in business for 10 years. This will not cover large corporations such as McDonald's and Whataburger. This is made for small businesses specifically. So if they've been in business for 10 years, that incentive could be $10,000. So we're gonna, basically my mindset here was if we gave $1.5 million to one developer that didn't produce anything, that lets us help 150 small businesses with the same amount of money. Let me be clear here that we're looking to give some money up front, not the entire $10,000, to help them get started. There is going to be an audit on our part to make sure that, number one, they sign an agreement. There will be a clawback if they don't stay in business longer than 3 years. We can work on that to make sure they don't grab that check and run. Secondly, we're looking at to make sure they're up to date on their taxes. I'm just thinking about people that have made it through hard times and through good times, specifically some business like Beverly's Hardware, Starlight Burger, Hamburger Kings, the ones that have really put in the money. And let me tell you something, I have no vested interest in this at all. These are people that I've gone to eat at their diners. I've sat there, I've seen that the tables and chairs that they have are either cracked or the chairs are ripped from the seating. This would give them the option to go out there and buy furniture and to paint up the place and to really do some things. I did talk to Senator Corning's chief of staff. She thought this was an awesome program, and she's excited, and I guarantee you that other cities are going to follow us when it comes to this. So it's not just giving away free money and throwing away money. This is a beautification plan where there's checks and balances, where people go out there and they see what it is that we're doing. I think in the past we've given away money with nothing to show for it, but people want to see the value and what they've done with it. what we're doing with it. So, you know, this is contingent upon our budget as well. It's not just something, but I'd like to get this plan going if there's money budgeted to start helping some of these businesses. So, you know, I'm going to give you more work here, Mr. Trevino, in the sense that, you know, we're going to go and we're going to watch this money. We want receipts on every dollar spent. It cannot be used for things such as payroll or to pay their taxes, but just for beautification. It could be used for signage, parking lot, you know, and we'll basically write, and there will be repercussions if they go out of business within 3 years. So it's not just get the money and run, but there's people that have been dedicated, and this money that we have been giving to other people, to mention just a few that were on the agenda previously, like Santana Textiles, you know, they were given 15 million. Can you imagine how we could have beautified the city with that type of money? And you'll have to admit that there's restaurants that you go into and you're like, man, you know, if they could just get a little help, and that's all we're trying to do, is we're trying to give the city a facelift and put it on track.
One of the things that I would recommend is to include stipulations in regards to the type of businesses, how many businesses we're going to do per year. I think we need to have those parameters set because here it doesn't say any of that. The other thing is that we need to also address the lease spaces. So if I'm leasing a lease space and I have a restaurant and I've been there for 20 years, am I gonna be able to apply for this grant? You know, those things need to be taken into consideration because there's a lot of owners that are renters, and if they're not going to be subject to this grant, are the owners of the actual development of the lease space going to be eligible for this? So those are a lot of things that we still need to consider, and we need to make sure that we cross our T's, dot our I's, and that we put everything in a contract form, because it's imperative that we don't fall in the trap of the past administration. We do everything up and up. Everybody knows what we're doing. Everybody knows where their dollars are going, that there's no funny business going around, no backroom deals going around. Everything needs to be out here in the forefront. So,
Yes, sir.
I think that we need to have another viewing of this contract with those stipulations and those things addressed. Mayor mentioned about the McDonald's and the Whataburgers not being eligible. I don't know how you'll be able to separate that, but that's something that we definitely need to look into and see how we can carve those types of businesses out. If that's what we want to do, we definitely need to make sure that we cross our T's and dot our I's.
Yes, I understand, Mr.
Okay.
President, and we'll be working on this continually till the next meeting.
I agree with you, Mr. Enriquez, great points, but let's just remember that we're going to try to help businesses, small businesses, I'm a small businessman, most of us are, that have been able to sustain for at least 10 years and paid into the pot. So we're going to keep that general framework in mind, but there is a lot of things that we need to work on. But it's a positive thing for the small businessman.
And before people start saying that I or anybody else here are going to apply for it and we're going to get it, I'm not applying for anything. And so want to make that clear to everybody. My building is fine the way it is. And so I just want to make that
I don't
that
qualify,
statement.
I don't pay sales tax.
Yeah.
Yeah, you don't
All
pay
right.
sales tax either, Joe.
Sometimes I do. Sometimes I do.
Motion to approve
All right, so
Second.
we have, well, we,
With the stipulation.
with stipulations.
With the
Bring it back.
stipulations.
Bring it back. Bring it back. Let's start moving forward with it, but bring it back.
Okay.
Stipulations.
so we have a motion to review the contract again and bring it back, and we have a second by Mr. Salinas. All those in favor, please raise your right hand. All those opposed, same sign, motion carries. Item number 14. We have discuss and consider authorizing the executive director to enter into professional service agreement with Aaron Vela, attorney at law. This is a renewal. Do I have a
To
motion?
approve?
Second.
We have a motion by Mayor Molina, second by Mr. Salinas. Any discussion? All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. Mr. Vela, congratulations.
Thank you.
Item number 14, discuss and consider authorizing the executive direct, oh, I'm sorry, that's the one that we just approved. I'm sorry. Right, item number 15, discuss and consider approval of the Edinburgh Economic Development Corporation Personnel Compensation Plan. We're going to move that after we come back from executive session, if that's okay with the board.
Yes.
Okay. Item number 6, discuss and consider authorizing the executive director to amend the lease agreement with Fiesta Taxi. It's not tax, it's taxi, RGV, DBA, RGV Yellow Cab. Mr. Trevino.
Mr. President, members of the board, this is an existing tenant we have in our Renaissance building. They currently have 450 square feet. We charge them at 35 cents a square foot. They pay $157.50 per month on rent. They're asking for some additional space for storage. We have some additional room there, 103.7 square feet to be used. That 35 cents is very below market value. I would like to renegotiate this with them and maybe charge them 50 cents a square foot.
Well, if you can get $1, that'd be even better.
Okay. I know in the direction we had on the workshop that they'll instructed me to look at selling some of our buildings. So this one building has tenants already on there. We put that for sale and see if we can have it for sale. But in the meantime,
And we'll stipulate that in the clause, right? That if we sell the building, that they're going to be terminated, the contract, the lease agreement is terminated.
We can do it month to month if you
Or
want.
month to month,
However you
okay.
want to do it.
Okay. Yeah, I agree. I think we should not be in the leasing business, property leasing of business. Okay, so any other questions? All right, do I have a motion?
Move to authorize the executive director to move forward.
Second.
So I have a motion by Mr. Torres, second by Mr. Salinas. All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. Item approved. Item number 17, discuss and consider authorizing the executive directors to solicit bids for the parking lot project at 101 North 10th Avenue, Edinburgh, Texas. Mr. Trevino.
Mr. President, staff, board members, we were directed, we have the old EDC building on 10th Street, and then behind the open vacant land in front of the fire department there is our land, and I think this had already started before I came in. We had Quintanilla Headley Associates to do a design on the parking lot, and I know there's some discussion on redoing the old EDC building with a resource center. So
Resource Center for the community.
For the community, yes, the resource center for the community. So I just brought this back up. I know Lalo's here from Quintanilla. He gave us some initial cost estimates on the parking lot and wanted to discuss that in open session with you.
Okay. I think the mayor had some questions also, and I had some
Yes.
questions.
I just wanted to, there's been millions of dollars that have been invested into the old ADC building. And we had always been looking for a secondary library location. We had talked about putting it somewhere maybe on the east side of town. So we started thinking, okay, we're going to have to go out there, we're going to have to buy a piece of property, we're going to have to do the construction, and it's going to be a multi-million-dollar project. So one day, I walked into the old EDC office, and I saw the size of it, because really it's the current office of Terry Canales, and then it's the old EDC building, and then it's where the other tenant was previously. So it's a pretty big space, and there's only a wall that separates each one. So trying to save the most money but yet get our projects done, which is, the library has had a lot of problems with the roofing. I know that Councilman Salinas has gone and taken multiple complaints that when it's rained there, that the computers get damaged from the rain. So we're looking at a resource center and basically open that up to the public, because it is a public building. So the public should have access to it, and there's some savings there by doing it there, and I believe it does has the space. We want to cooperate a project with the university, also with our Edinburgh Arts Foundation, do project with the chamber. There's several key people, key entities that have come up in a partnership. The building already exists, and I think it'd be a great place for a resource center. And I'll leave that to the library people to give us manpower and the different things they're going to need. When I did take the library board down there to take a look at it, they were sold on the vision, and they thought it was a perfect project to be able to do different things like the GED program, the food handler's license. They can take their classes there, have access to Wi-Fi and computers, and just leave it up, opened up to the public. So what they mentioned was the fact that they felt that the entrance should be on the other side, and there's no doubt that we've needed, the parking there is long overdue. I'm not disputing that at all, but what I am saying is we're obviously going to lose some parking spaces. I don't want to lose any parking spaces, but if the entrance is more convenient, and I don't know, since they're working on that, maybe they can do, since they're already constructing doing the thing, maybe they could do the entrance as to what's more feasible. But really, it's something that I want to get right the first time. I don't want to come back and say, well, it's better to do the entrance here. I do know that it is a hassle to walk all the way back, but I thought that back space was going to be used more like the chamber for outdoor events, where they'll probably close it up and the entrance will be through this side. But, I mean, I'm open to suggestions, but at the same time, I just want to make sure that we're getting the most bang for our buck.
Well, one of the things that I agree with you in terms of the resource center. However, I am reluctant on the entrance to be on the backside. And the reason why is because you mentioned it, Mayor, you're going to lose parking spaces. That's one. Two, that parking lot, if we convert it to a resource center or we decide to sell it, it's only valuable if there's parking. So this project is inevitable in my opinion. And this parking lot was also going to serve two purposes. One, parking for the actual building. And two, it was going to help the fire department also, because if you notice, they don't have a place to park, and they park in the dirt, and their fire trucks only have one exit and entrance, and that's on McIntyre. The proposed parking area that's included in the packet shows that they'll have an exit down the parking lot and onto 107. So really, they'll be able to have access going on McIntyre, east or west, or they can go on 107 headed west. So it was a twofold issue here on the parking lot. I understand that the convenience of walking to the front and all that, but if we can maybe put a walkway canopy or something for when it's raining or something, so people can still have access to the building through the east side. I think those accommodations could be also met. I just think that we get more parking spaces if we leave the main entrance on the east side. But again, that's my opinion. It's the wish of the board on how they would like to proceed. But what we have here is just specifically parking area, and if there's any changes that we want to make, or we can tell them to hold off until the council decides on what that building's going to be.
Maybe he can do the rendering and let us know what's feasible, and then do it all at once. So.
Is there there could be an opportunity to just create an entrance just on the south side of the building?
That's the other option.
Not even have an entrance through the parking lot. Just create a new entrance in one of the windows. I mean, it's just knocking down some walls, knocking out some windows, and creating a new entrance.
That's an idea too.
So I know the city has already taken some measurements and is doing some drawings of the interior, and I'd be happy to help them you know, in my background, I can,
Oh, we're
Figure
gonna-
something
We're
out.
gonna get a discount, you're gonna draw it up for us, Joe?
I'll give you some ideas.
So right now, Quintanilla and Headley, they're doing the parking lot only right now. We're
Correct.
talking
Just the
about the
parking, yes.
parking lot. I like the other entrances, although I see your point on parking. We have to find a way to keep the parking and get another entrance. So I like those ideas. We just have to be careful.
Yeah, the idea that Mr. Trevino has is honestly a very viable, just have one entrance, that they can go through the back. It won't be the main entrance, but it'll be a back entrance that will lead into the areas, but you still have your main entrance on the east side.
You'll have two entrances, pretty much.
Yeah, you'll have two entrances.
You're saying off of the 107 side?
Still keep that, and then also have a side entrance off the,
Off the parking.
off the park, not off, on the, if you look at the drawing, there's 107 and just developing
Oh,
an
on
entrance
the side. On the south side
Yeah,
of
on
the
the south
building.
side, south side of the
He's
building.
saying on the south side of the building, which would be just right there at the corner.
Yeah.
Basically. So it's not that far of a walk.
Yeah.
I'm saying because you're gonna definitely need the parking. If it's gonna be used as a resource center, there's gonna be a lot of people.
There's a parking
And-
issue there, too.
And then not only that, but when and if they ever start the construction of the courthouse, it's gonna be in need more than ever. More than ever.
Can we talk about this? Who's in charge of the design? Aaron, we can talk about it?
We were only
Also,
doing-
as far as the proposed facility also, not just the parking.
That's
That's
all we
not
were,
you all,
we were
right?
only
No,
hired to
the-
do the parking
it's the
lot
city.
that
The
you
city
showed there.
manager
Yes,
had
the
city
sent,
manager,
had
okay.
sent
Okay.
some,
Just my concern is if we do the parking lot and then we do get a professional to say, hey, it's more feasible to do it on this side, that's all I'm saying is, when they showed that to me, the library board, they're the ones that said, look, it's more feasible for us to do it here, they're the ones that are gonna be manning it. I just didn't wanna step on their toes and say, hey, let's do the parking lot, then we end up spending some money. That's my only concern, I just.
No, I agree with
We
you.
need the parking lot.
And that's,
There's
and
no
that's a
doubt.
valid point, but I think if you were to tell them that you would lose parking spaces, they would say, oh, no, forget it, because remember, before the parking lot that was done for the school at the, what do you call it? At the stadium, they had that little parking area for the library, and nobody could park. They were using First National,
I remember.
back then, First National Bank's parking lot. So they didn't have any parking. So I think if you were to tell the library director, hey, are you willing to lose, 20 spaces? I don't think she would go for that. But again,
Let me ask, sir, would we need to lose spaces? I'm looking at the entrance that comes off of,
If you only put an entrance on the south side, or if you put an entrance on the west side?
no, the south side, no, the
west side.
let's talk
the
about,
west side.
let's
West
talk
side.
about the west side for now. Will we lose spots in your
that'd be
opinion?
Right now, if you just put a door, we won't, it
Just
won't
a
affect
door?
the parking
Yeah.
lot.
yeah, but you don't want people rushing straight into a driveway. I mean,
Well,
that
we
could
do
create-
have a 5-foot sidewalk next to the
Yeah.
building,
It could
so-
create, yeah.
in the
Some
parking lot.
Speed bumps
layout.
and so forth. Well. we
If
can-
you just put a door, then you won't lose spaces. My thought process was that you're gonna build a facade,
Yeah.
like a main entrance. That's what I was
Yeah,
thinking.
but I don't know if that's what, the thing is, they do have a rendering and some suggestions.
They already do? Okay.
They do, I just
like
didn't
it.
wanna,
Maybe give me an opportunity to review it.
yeah, I mean, I don't mind, as long as they're okay with it. I just don't wanna step on their toes because they have a plan, and they've already spoken to all the partners on what they
Well,
want.
then why don't we do this? Why don't we have Mr. Ramirez get with Mr. Trevino, and they can get with the
Yeah.
library director and hash it out. But in the meantime, if you want to go over the
Yes.
plan that you have, because it might stay like this if
Right.
if they decide that the east side is good.
Can he do the building or no? Can you do the,
We can get somebody to help us with that, but we were
you're specifically part, do
Civil.
parking
engineering,
lot.
civil engineering.
Okay.
Go ahead, sir. Go ahead, Mr. Ramirez. Thank you
Okay,
for being here.
what we were doing on the parking lot, I think you have a drawing there?
Yes, sir.
Yes.
Okay, we do have a heavy-duty pavement section for where the fire department's supposed to go out through. And I think you also have an estimate in your drawings. That heavy-duty was gonna be 3 inches of hot mix and 12 inches of caliche, and then the subgrade. The rest of the parking lot is gonna be 2 inches of hot mix and 8 inches of caliche with subgrade.
That's for the fire trucks, right? The 3-inch?
The 3 inches and the 12 inches is for the fire trucks to go straight out to the south. We originally had a different layout, but that we did actually go and get some bids, but this is a different layout. So we would need to do the full set of plans for this layout that we have. Right now, this is just a plan view of the overall parking lot. So we're gonna provide a chain link fence around the parking lot. And we were gonna continue with the sidewalk there in the front. It does have some square brick pavers. We're gonna put that in. We were gonna put a 5-foot sidewalk on the west side of the building. And basically, like you show on the east side, just have one row of parking. And then in the middle, you have traffic going south with parking on both sides. And on the one for the fire lane is going south, we also have angular parking on both sides of the road. Basically, and there is some drainage involved that's not shown in here, but it's in the estimate. There's an inlets there by the fire department that we're gonna connect. As long as you get authorization, then we can prepare the full set of plans for this, if that's the route you wanna go. So right now,
Go ahead, I'm sorry.
so right now, this is just an estimate for this plan view that we have, but we do have to do the full set of plans if you authorize us to go out for bids.
And that estimate is the 206,000?
Right.
Okay. But you can attest that right now would probably be the best time to go out because there's very little work out there and everybody's gonna be very competitive, so that number might be
We are getting a
reduced.
lot of bids for whenever we go out, so the more bids you get, the better the price.
And by the way, we will go out for competitive bid. We're not gonna be giving it out like in the past. Even though that the EDC doesn't have to,
I would just need to,
go through the
for you to tell
procurement
me
laws.
which route you go,
we're
which
gonna make sure we
boilerplate you
do.
want on the contract,
Right.
and who does the advertisement, you want to set it up with or EDC is gonna set it
Right.
up?
Yeah, we'll do it.
So one of the questions that I have is why chain link fence around there? It's gonna look like a,
Well, we originally had another layout when we went out for bids, but it wasn't expensive. It was a lot more expensive.
even just the pipe, just
We-
to cover the entrance?
Well, we can do that. Well, originally, we had like a small area of concrete with concrete columns and
Yeah, no.
iron bars there, but
We don't need the Taj Mahal.
we're not, no.
We
This
just need
this
a
is just
functional
strictly
parking
chain link
lot.
right now. That's the way we were directed.
Yeah,
Just go
we just need a
chain link.
functional parking lot.
Right.
But my concern is the chain link fence appearance. I was envisioning just in the entrances where we can close it at night so nobody will be parking there, or just have the fire department, be able to open and close it whenever they need to.
In the original layout, we had a system where if the fire alarm goes off, that the doors will automatically open
No.
up. And,
No, not that. No, that's too expensive.
Right. So as long as somebody is gonna be there to open and close it, yeah, you can close the gates at night.
Well, yeah, I mean, they're there 24/7,
Right,
so.
I understand.
Yeah, so that's one concern. Maybe we can change that up, because I wouldn't want to have a chain link fence around there. I don't think it looked good. That's my opinion.
We can propose different ones, and you guys just make the decision on which type.
Okay, and then the second thing is, I don't see anywhere, there's an electrical pole that's there. I don't see how that's being addressed. Or there's an electric, I guess.
It's staying there, it's overhead, and it's staying in the area between the parking, that it won't affect the parking lot. The pole will stay there. We're also putting some light for the parking lot. I don't know if you can see it, I think you have a copy, right?
Yes, sir.
Right.
Maybe with this one.
No, we can see it.
It has lights there on the parking lot also, so there are gonna be poles in the parking lot for lights to light the parking lot.
But that electrical pole is going to stay there?
Right now we can talk to AP and we can have it relocated.
Yeah, I would like to relocate it.
Okay.
That's gonna look weird with the electrical pole, because I think that's that pole is just servicing the
The
EDC
building.
building.
Right. We can get it relocated or put underground or something else.
Okay. Yeah, let's
But-
look into relocating that
But
pole,
we are gonna have lighting poles there in
Right.
the parking lot.
which is good.
Okay.
We definitely want it
And if you
lit.
want, we can replace that with a concrete pole with a light on it also. We
Why?
wanna leave it that one in place.
Which one?
The one that's existing there, it's a wooden pole.
Yeah,
We
no,
could have it converted
No.
or, okay,
no, to remove it.
okay.
You don't want it wood.
Guess the next big question is, do we want to move forward with soliciting the bids? Or do we want to wait till we,
Well, this would just approve him so he can
Start.
do the final design.
The final design.
Like, do the final schematic, I mean, he's in the schematic, so he would do the actual, design development.
before we go out for?
Right, before we go out, right.
Okay, so we have time, so we can all sit down with the library
Yes.
board and the city manager.
Basically, he wants to know if this is a good layout.
We have the direction was to solicit bids. I guess we can just not act on it, and I get with them and
Because you still have to
We still
final.
prepare the
Okay.
contract document and the set of plans. The set of plans is quite a few sheets that we gotta prepare,
Right,
okay.
okay,
and we're just waiting to see if you're gonna authorize that or not.
okay. So why don't you get with Mr. Trevino?
Yes, sir.
And then the library director, and see what we can do in regards to the entrance of that building.
Okay.
Yes, sir.
We'll do
Okay?
that.
Appreciate it. Thank you
Thank you.
for being here.
Thank you.
Thank you, Lon.
Thank you.
Thank you for waiting. All right, so we'll have no action on this item.
Sure.
Okay, item 18, Executive Director's Report, monthly activities and meetings.
Just real quick, just wanted to express some of the things upcoming. We have, the mayor and I went to Austin last week, and we had some really good meetings with the chiefs of staffs of the lieutenant governor, the speaker of the House, and the governor, and Senator Chewy in Jose's office, TxDOT, Texas Workforce Commission, and I think we got a lot of progress last week, and hopefully we're going to proceed and develop a legislative agenda along with the city to incorporate some of the direction and some of the advice they gave us. Overall, Mayor, you want to chime in on that, those meetings? But again, I think they were very successful, and just can't wait till our next meetings to bring some real funding into the city and go and move forward.
That's the key, funding.
Yes, sir.
Need to bring funding.
Right. So I just wanted just a short report on our trip to Austin, and anything else, y'all?
Any questions, comments?
Job, it's not easy to go out there and pound the pavement, but it needs to be done.
Yeah, and we had real good meetings. Yeah, I was real impressed at the help we got. Everybody knows where Edinburgh is. Other than
Well, it's been in
that,
the news lately, so everybody should.
other than that, I don't have anything else to report right now.
Okay, all right, so do I have a motion to enter executive session?
So moved.
Got a motion by Mr. Torres, second by
Second.
Mr. Salinas. All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. I'd like a motion to enter regular session.
So moved.
Have a motion by Mr. Torres.
Second.
Second by Mayor Molina. Any discussion? All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. For the record, no action was taken in executive session. Also for the record, Mr. Mike Farias joined us in executive session around 8:30. The time is 10:26. Item number 10, discuss and consider possible action of the EEDC fiscal year 2017-2018 budget. We are going to take no action at this, and it will come to us at a later date. Is that correct?
Yes, sir.
Okay, item number 15, discuss and consider approval of the Edinburgh Economic Development Corporation's personnel compensation plan for fiscal year 2017-2008. Mr. Trevino?
Yes, Mr. Chairman, I believe you just wanted to proceed as directed in the compensation plan.
Okay.
So moved.
Right, that item was taken in executive, and that's how y'all taken, that's the sort of action you're going to take, yes.
Okay. So we have a motion by Mr. Torres.
Second.
Second by Mr. Salinas. Any discussion? All those in favor, please raise your right hand. All those opposed, same sign. Motion carries. Item approved. 19B, deliberate authorizing the executive director to enter into a development agreement with GRH Investments LLC. Mr. Trevino?
Yes, sir. We were going to proceed with a $100,000 incentive package to Mr. Gil Hernandez at GRH Investments, $50,000 upon completion of the project, $25,000 as per occupancy, half occupancy of the development, and another 25 upon full occupancy, with a 3-year a 3-year binding commitment to this operation, and cannot sell or stop work on it for 3 years would be the clawback. So that's the recommendation.
Okay.
Motion to approve.
Motion by Mr. Torres.
Second.
Second by Mr. Farias. Any discussion?
Yes, I'd like to add that Mr. Gill has several businesses within the city. As a matter of fact, he does have 2 that will qualify for our plan, but I guess with the help here, he's already been taken care of with this new project. But he has several businesses, owns several properties, and runs several commercial buildings. And on this particular project, this is being considered because of the tax base that Mr. Hernandez has provided previously through sales tax at his restaurants, to include the ad valorem tax that he has produced for the city as well. So just wanted to comment on this.
Okay, thank you. Any further discussion? All those in favor, please signify by raising your right hand. All those opposed, same sign. Motion carries. Letter C, deliberate authorizing the executive director to
No
enter.
action on C.
Okay, so there's no
Action C.
action, Mr. Vella?
Right, no action on C and D. We go to item E.
No action on C and D. Letter E, deliberate possible action regarding the lease agreement and option to purchase with Nuco Tool, Inc. Mr. Trevino?
Yes, Mr. President, board members, we proceed with the 60-day on the court appearance, and the court appearance 60 days, and order an appraisal of the building.
And the 4 acres.
And 4 acres that is adjacent to it, yes, sir.
Okay. Do I have a motion?
So move.
I have a motion by Mayor Molina. Do I have a second?
Second.
Second by Mr. Torres. Any discussion? All those in favor signify by raising your right hand. All those opposed, same sign. Motion carries. F?
Yeah, on 19F, we need a motion for myself to proceed as directed in executive session.
Okay, do I have a motion?
I make a motion.
Motion by Mr. Farias.
Second.
Second by Mr. Salinas. Any discussion? All those in favor signify by raising your right hand. All those opposed, same sign, motion carries. That was 5-0.
Right, that covers all the item.
Okay, do I have a motion to
Oh,
adjourn?
no, wait,
Wait.
nothing? Okay, okay.
Yeah, do I have a motion to adjourn?
So moved.
I have a motion by Mr. Torres, second by Mr. Salinas. All those in favor signify by raising your right hand. All those opposed, same sign, motion carries. Meeting adjourned at
10:30.
10:31. Thank you.